Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. I'm Spencer Israel. As always, joined by Joel Elconin and Dennis Dick on this show today. Lots of news to discuss. Some stocks, crypto that are moving with crypto news. SPI, LITB. We have some acquisition news between Win and La Quinta. JUNO giving some of it back. We've got earnings, Alcoa, KMI, Morgan Stanley, some ratings to discuss as well. And we didn't talk about Bitcoin at all yesterday, so we'll talk about that a little bit too. Two guests for you folks. 8:15, we're going to be joined by Mark Chaiken from Chaikin Analytics. And then at 8:35, you're joined by Anmol Singh, founder and head trader at livetraders.com. Joel, we've got some charts up. Tell us how we're doing in the S&Ps.
S&Ps are trading down $1.25. 0250 is your last print. You made a high right up at 006 and big number on the upside. Let's go to the daily chart here. You had a high on on Tuesday of 0850. You hit 09 even yesterday. So there you go, folks. Potential double top, but we'll see if we can take that out today. Let's take a look at the crude oil market. Crude oil futures trading in the red. If I could get crude instead of Colgate Palmolive. Crude in the green by 7 cents at 63.99, trying to get back into the 64 handle. Couple spikes over 64. Looking at the gold market, gold sold off a little bit today, down 1070 at 1328.60. Another double top here in gold from the prior two sessions at 1345. And let's bring in a big chart here. Boy, I like these charts at Trading View here. Bitcoin dipped down to 9,500 yesterday, back up trying to get into the 12,000 handle, currently trading up $578 at 66 cents, 5% at 1175. Good morning to you, Dennis. Here we are, live video on Benzinga's PreMarket Prep.
What's going on? What's going on this morning, boys?
We're just trying to work our way.
Let's show them the office.
I am showing the office.
Oh, you're showing it now. We got the delay.
I'm showing it now. Give me a break.
There too. All right. Anyway, so we're live video here now. Let us know what you think here, guys, as you can see what is happening behind the scenes. There's Joel. There's his mugshot. There's the Benzinga office behind the news desk, kicking around, ready to rock, ready to work for you guys. So let's go. Let's start talking stocks here right away, and let's move right into the earnings here. Let's go to Morgan Stanley because it is the big report here from this morning. We have seen a theme where a lot of banks have reported good numbers and sold off. We saw it yesterday with Goldman Sachs. That's obviously the best indicator for Morgan Stanley. MS, I believe, has some good numbers here too, although it is holding on to the gains.
84 cents versus 77 cents on the adjusted EPS. Sales 9.5 versus $9.19 billion. So, yep, good numbers there.
Joel, talk about the pre-market action here in Morgan Stanley.
Big old pop in Morgan Stanley here. Got to move up to 56.66. That stands as your pre-market high, moving back into the $56 level. Let's take a look at the daily charts here. Very, very nice move for Morgan Stanley. Just remember, Bank of America sold off, but ended up coming back. 55.98.
They all come back, Joel.
So 56. That was a former high of the move. Gap filled down to 55.41, but basically coming back in, filling the gap, keeping an eye on that pre-market high of 56.66.
Jump over here just to another bank stock that reported, just while we're sticking with them. We got BK also, and it is going the other way here this morning. It's trading down 2.5% in the pre-market. Spencer, give us numbers for BK.
BK, $1.08 versus 91 cents for the EPS. Sales of 3.73 versus $4 billion. So they missed by a bit on the sales, and they beat on the EPS.
Stock trading down. It had run up into the report as well, 54 up to 58. We know the banks have been hot. And Joel, you made a good point on Bank of America. Even when these banks have sold off after the earnings, they have bounced back. Goldman sold off pretty hard yesterday, but it even bounced back from the lows as well. It'll be interesting to see what it does there today. We know Citigroup was the first one too. It had great earnings, sold off, then kind of bounced back too. It's like you can't keep these banks down here. They know we're kind of coming into this rising interest rate environment. The environment for the banks is just good enough that I think on all of them, I think there's underneath demand.
All right, let's look at the BK here, the Bank of New York Mellon Group. Hit a new high 2 days ago. The close 57.89. In order to get into yesterday's range, you need to get back up to 57.11. That fills the gap. Also, to get green on the session, 57.89. Looking on the downside here, we're currently trading at 56.50. Man, I don't see any daily lows to lean on here until 55.75, and that was your low right here. So be careful in this area here. If we already are taking out that 57, just not a lot here, nothing to lean on here. But if you are catching the short, just be aware of 55.75. That represents your 4-day low.
Jump over just to a couple other stocks. One that reported last night and getting beat up here this morning. I do have this one in my investment portfolio. Alcoa Double A getting the hit here this morning. Spencer, details.
$1.04 versus $1.22. Sales of 3.2 versus $3.29 billion. So they missed on both the EPS and the sales.
Stock trading down 5% here in the pre-market. It was trading fairly actively in the 53 handle last night as well. So you can say price discoveries kind of already happened here. But again, when the real liquidity comes in at 9:30, sometimes some funny things happen as well. But I mean, Alcoa was $40 in December and then $57 almost closing out yesterday. So definitely a stock that ran up into the report.
Wow, trading down 312 at 53.87. Spotty trades in the pre-market, but just give you some daily lows to keep an eye on here. 53.52. Actually got a pair of lows right in the 53 handle surrounding 53.50, 53.41 and 53.66. So keep an eye on that. If not, you fall into the $52 area. Very important for this to hold 53.50 off the open, trading right there, right now.
Jump over to some other stocks that are on the list
real
quick.
Real quick. Question from the chat: Would AA earnings affect Arconic? I
don't think so. It's completely different related company. I used to think that the charts kind of do look the same. It's not good for it. But I don't think it's a direct sympathy play here. They're separate companies. Now, actually, Arconic is the legacy operation. That is the old Alcoa, and then they spun off the other operations into AA. I think you look at the charts, they all look the same, but you could say, okay, in the last month and a half, everything looks the same. It's straight up. So I don't think you're going to see Arconic come and get hit 3-4% here this morning. I don't know if I'd be buying it. So, it's a good point being made there, but I don't think it's that related as much as you would think it coming from. And we've seen different spin-offs before where companies spin something off and then the stocks just trade in different directions. So I don't think there's that much relationship between Arconic and Alcoa. Jump over here to just a couple other stocks. The blockchain stocks, we have two of them from this morning. We always like to mention these. LITB, Light in the Box Holdings, ADR. That is, what are they doing, Spencer? LITB, you got the headline?
Yeah, they're opening a blockchain technology research lab.
Ooh. So anyways, LITB getting a nice 17% pop here. Did they announce this like a week and a half ago? Because it had the big pop a week and a half ago as well, 250 to 350. So was this cat already out of the bag?
Nope, that was different. That was Light in the Box is now accepting Bitcoin payment.
Okay, so they were still mentioning Bitcoin. That was a Bitcoin mention. This is a blockchain mention. So they're trying a different trick here. Again, these things seem to pop on these and give it back. So I don't chase any of these moves anymore. They're definitely short-lived, especially since we had the Bitcoin collapse yesterday, which we're going to talk about in a second. The other one, SPI, SP Energy, they're up 33 cents here this morning from 86 cents up to $1.18. What do they have to say?
SPI, right? Yeah, they were also, this is every day with these. They're establishing a strategic partnership with Hufu, the hack-proof cryptocurrency hardware wallet.
All right.
So again, this is just blockchain / Bitcoin pop here for SPI. Had a big pop 2 days ago as well. So I'm not sure if something was mentioned there. Getting another lift here. I think there's going to be sellers that meet this.
All right, boy, these are low price stocks here. So, when you're dealing with these, you just want to try and find any kind of identifiable size. We did get a pop over 240. You look at the daily chart, and this thing is kind of goofy. You had a high. This is going back a few sessions, going back to November. You had a high at 261. Trading up 33 cents at $1.20. And what was the other one? LITB. LITB, boy, had a rough few days. People caught in the high of the move here. High was 352 on January 8th. Let's take a look at what's going on in the pre-market. See if we're getting any kind of those losses back. And we did. Haven't got over 3 right back. So surely not getting the pops in those stocks that you did originally.
No, they're not. And please don't call me Shirley. Let's go to the Bitcoin crash yesterday. And obviously it was a 2-day crash. I mean, these things came down substantially there, but none got hurt. Before we talk Bitcoin, let's talk Bitconnect. None got hurt. I had never even heard of Bitconnect before 2 days ago. Have you heard of Bitconnect?
No.
So this was one I had to go to the coin market cap list, and it was like number 98 or something on the list. Anyways, well, it was higher than that earlier though in the day because it went from over $300 down to under $20. And so you're talking, it had 97% fall yesterday or over the last 24-hour period in price. And it ends up that this looks like it was a Ponzi scheme. So everybody who put their money into it were promised these big returns. It was something like a lending platform where if you lent the company money, they were going to give you upwards of 40% return on your money a month. Like whenever you see something like that, it seems too good to be true. It most likely is. And it does look like a digital currency Ponzi scam, and they've shut it down now. And it looks like everybody else is who invested in this looks like they are going to be out the majority of their money. Some people talking about on this Bitconnect on the Reddit network, talking about losing, one person said I lost over $500,000. It was the majority of his savings. Another person said they lost all their money too. I mean, the one thing that we've stressed on this show, and obviously I've been bearish these currencies all the way up and all the way down. So I'm not going to pat myself on the back because it was bearish a long ways, a long time ago on these things, and I never got involved. But the one thing we've stressed and we've said, it's kind of got to look at these as more speculative investments. These are not, Coca-Cola. These are not your household names. These are not solid companies that aren't going anywhere. These are speculative investments, even Bitcoin. So only put speculative capital in it. If you think of it as, going to the casino, I don't mind losing, maybe 2% of your net worth or something on it, go for it. But again, don't put any money into any of these things, and especially now that they've come down in price. People are backing up the truck saying, this Bitcoin is going to get back to 20,000. I'm going to get rich. I'm going to put all my money in it now that this is the big buying opportunity. Maybe it is a buying opportunity, but again, only use speculative capital because we don't know that. And really, when you stop and think about it, there's a lot of these, we don't know who the winner is going to be. It was the same thing during the tech bubble, except that the tech bubble, there was actually real companies there making money, and producing products. This is just digital numbers on a screen. It's a matter of whether they're going to be considered a store of value in the future or not. So this is still just speculative capital. That's just the warning I wanted to send out at you because the prices look a lot cheaper here today. It looks like it could be a buying opportunity. I don't think it is personally. I think it's, nothing goes straight down. So you're always going to get these pop back ups. I think the Bitcoin bubble has burst. I think the digital currency bubble has burst. I think you're going to have overhead supply in all of these things now. You have, people on the network and the Bitcoin believers saying, well, look, January is always a bad month for Bitcoin. It always comes way down in Bitcoin. But the difference is a big difference here now. The difference is the masses. The masses weren't in these, 3-4 years ago when when it dumped in January, when it went down from in 2014, it had its low in January, in 2015, low in January, 2016, low in January, 2017. Low in January. Now you're looking 2018. They're saying the same thing. It's going to be the low in January. But the big difference is the masses are in now. It's not just,
overhead
the believers,
supply, right?
And you have a lot of people who got hurt on it this time. So I'm saying overhead supply as well. I think pops, if I'm trading it technically, are to be sold here now. So, and you did get a nice pop here overnight. Where is the Bitcoin trading now?
It was back around 12,000, hit 9,500 yesterday. And I just, traded.
Good pop back.
Yeah, it is a nice pop.
I think this is an opportunity. If you were in maybe too heavy, maybe to lighten up.
Nice pop. And it's funny because, you can apply the same kind of dynamics. I mean, I would look at, Bitcoin and these other cryptocurrencies. I mean, fundamentally value them, absolutely impossible. Technically trading them,
well, you can't value them fundamentally. And I've said that it's impossible to value fundamentally. And then Josh Brown came out with the article. He's like, it's very easy to value Bitcoin from an intrinsic perspective. The value is zero. You know what? I agree with that. There's nothing there. It's just digital numbers on a screen. The intrinsic value of it, there's no dividends. There's no products being produced. It's zero. The intrinsic value of it is zero. The question is it, going to be considered that store of value? And obviously it has value. It has value of $12,000 right now. So it has real value. But I would say the intrinsic value, I agree with Josh Brown, is zero.
Now, well, just talk about trading it technically, in the height of the mania. What did it do? It got just over 20,000, 20,089, right? We talk about the whole number theories that stopped it on the upside. On the downside, you got through, you knew you were going to shake people out under 10,000 or at 10,000. It did not stop at 10,000 on the nose and went to a 94.84, I believe. So, round numbers coming into play again. Now 12,000 at the level. What I'm keeping in my head now, 20,000 down to 10,000 until it can get back to 15,000 and get back over and hold 15,000. I think the worm is turned and I'm bearish. Bitcoin until I can clear that level.
Let's get Mark Chaiken's thoughts on that. We're going to take a quick break and grab Mark Chaiken from Chaikin Analytics. We'll be right back. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, joined by Joel Elconin and Dennis Dick. And I'm on the line with Mark Chaiken from Chaikin Analytics. Mark, how's it shaking?
It's a good start to the new year. Happy New Year, everybody.
Happy New Year to you as well. Don't think we've spoken to you since the new year. So give us your thoughts here. We're now a few weeks into 2018. Impressions from the first few weeks of trading as they relate to the rest of the year.
Very bullish. We were monitoring earnings season closely to see how stocks would react to what was expected to be a very strong quarter. The market almost got a free pass here when the tax bill was passed late in December because you've got a lot of big write-offs from the major financial institutions. It's the last quarter of the old tax rates. So you've got almost the perfect storm. Earnings are coming in better than expected. If they're a little bit soft, blame it on the tax cuts and the various maneuvers that they took. But they're coming in strong and markets reacting positively in the banking space, particularly a very strong reaction to positive earnings. So we were bullish coming into 2018, but expecting that we'd see pullbacks of 5 to 10%, which we didn't see in 17. The strength in the first 2 weeks bodes well for another 10% in the market. So our target had been 2,800 to 3,000. We've already reached 2,800. And I think short of some exogenous event that's not right in front of us now, I think we'll see 3,000, maybe higher, before this bull rally ends in 2018.
Mark, do you think that there will be more volatility and or pullbacks than we saw last year?
Very definitely. A year like last year, where we had an inexorable rise with almost no volatility, very few pullbacks, none more than 2.5%. That type of year historically has been followed by an up year, averaging around 10%, but with much more volatility and more normal patterns of pullbacks. The biggest problem this year, in my view, is since we haven't had a pullback since Brexit in June of 16 of 5%, when that pullback comes, you're going to have all the talking heads on TV saying, this is it, the bull market's over, bear market has begun. So this is almost like the old order, GTC used to be called good till close when I started out in Wall Street, meaning, you know, as you got close to your price, you'd be likely to cancel the order. So it's going to be hard for investors, I think, and traders to buy into those dips. Even yesterday, you know, potentially outside day on Tuesday could have been a disaster. They stepped right in. But when you get into the middle of a 3, 4, 5, 6 day decline, people are going to start taking some money off the table and probably won't be looking for the opportunities that they should be looking for.
Mark, question about stocks going parabolic. And if you look at a stock like Boeing, it is up already 60 points in 2018. We're talking about a stock that typically will move, you know, 15 to 20% a year. It's moved that in the first 2 weeks of January. What do you do when you see a stock? You know, first of all, what's the Chaiken? You know, what are your analytics telling us about Boeing here as it goes parabolic here? And it seems to be up. It was up 16 points again yesterday. It seems like nothing can stop this. And how do you approach a stock like this?
Well, that's a challenge. Chaikin Power Gauge Rating has been bullish on Boeing for about a year. So anybody who's following Chaikin has been long the stock. But this is a difficult space for a stock like this. You can't jump in and buy it at these prices. You're assuming way too much. So I agree with you that this is a conundrum for investors. You've got home builders in the same situation going parabolic. You've got some of the apparel stocks that we talked about on the air with you about 6 months ago, like Coors and PVH going parabolic. So I think what you have to do is, if you're long these stocks, tighten up your stops. This is no spot to give up big gains, and then look for buying opportunities. Technology stocks are an example. You went parabolic into December. You had corrections of 20%. Now you've retraced about half of those corrections. So you may see that in a stock like Boeing at some point. Don't know what'll trigger it. You had the year-end Airbus Boeing competition. Airbus seemed to have done pretty well, but as you point out, it hasn't stopped Boeing. So I think the bottom line is, don't chase the stocks that are going parabolic. A lot of these stocks are getting analyst upgrades, believe it or not. You had analyst upgrades on Lennar and Pulte Homes this morning, two stocks that the Power Gauge Rating has been bullish on. You can't follow those analyst estimates. They're late to the party on some of these stocks.
Well, and that's what we see a lot of times. And I know Kramer even mentions this sometimes on Mad Money, and I know we mention it on our show. We have an acronym for that, Mark, and we call it the ACP, Analyst Chase Price. And it actually can power stocks higher and higher and higher, because as it goes higher, analysts have to upgrade, or they have to raise their price targets because they're way out to lunch. So it's funny when you have a whole bunch of analysts that, you know, have lower price targets on them when the stock is trading there. It seems like that they've got to come in and they got to chase price because they don't want to look, you know, ridiculously off on their estimates. So they got to raise them up. So do you ever incorporate any of that stuff into your analytics as well?
Well, we monitor what the analysts are doing in terms of changes in estimates and changes in analyst opinions. We also look at earnings surprises. They're three of the most sensitive factors in the model. The value metrics will tend to minimize the impact of excessive, price chasing or target chasing, or ACP. I love that one. So we do model this, and obviously they're positive factors. When the analysts are raising their estimates, as you say, it creates institutional demand for the stocks. Speaking of Kramer, by the way, can I put in a slight plug?
Sure.
On January 31st, I am doing a one-on-one, 1 hour private webinar with Jim Kramer, just Jim and I sitting around talking about stocks live midday from the Street.com studio. So I'm really proud and looking forward to talking stocks with Jim Cramer. Very, very exciting for us.
That's great. We hear him talk about you all the time on Mad Money as well. I watch Mad Money religiously. I also watch Fast Money too, and we always hear them mentioning your power gauge on Mad Money as well. So we appreciate all the work that you do, Mark, as well. Just before I hand you over back to Joel, I got one more. I'll take you off the board here. I got to ask you about the crypto crash here from the last couple of days. Your thoughts here as Bitcoin fell 45% over a couple of days. We saw this Bitconnect, which is another smaller crypto coin, fall 97% yesterday. We saw Ethereum down over 40%. Ripple was down significantly, got cut in half basically in 2 days. Thoughts here now on the crypto market as it's come back down to earth hard?
I probably don't have a right to comment because we really didn't comment on the way up, except to say that, bubbles always burst. So I think the best way to handle crypto is to go back to the NASDAQ index in 99 and 2000 and see that it had multiple peaks, even though we look back and say, oh yeah, it was really easy to spot the top. It wasn't, because you had multiple rallies testing that high. So unless the world is coming to an end for cryptos, and if someone like South Korea totally bans crypto trading, that's functionally the equivalent of world coming to an end, because so much of the activity is coming in that part of the world, you'll probably get rallies up. I've just never been a believer in crypto. Do I believe in blockchain? Absolutely. It's a secure shared ledger and seems to be embraced by large institutions. But Bitcoin, I think, is a fascination that was born out of the mistrust of central banks by millennials after the financial collapse of '08. Has some validity, but what is it? You're buying bits and bytes. I go back to the tulip mania in Holland in the 17th century. Tulip bulb was going for $40,000. Some tourist from England came, ate a $40,000 tulip bulb thinking it was a piece of fruit, and the whole bubble burst. In a sense, it's that kind of a market. Is it possible that it's going to be a store of value going forward? Maybe, but I just don't get it.
Mark, before we let you go, I just wanted to get your thoughts on crude oil and possible effect on airlines. I mean, it's not really bothering.
God damn, you're a mind reader. That's what I wanted to talk about. Honest to God, it's the top of my list here.
All right.
We're bullish on it. Bullish on energy stocks, have been for about 3 months. Saw the turn in the XLE, the Select Spider Sector Energy ETF. Love stocks like Marathon Oil, Marathon Petroleum, Phillips 66, and Devon. I have the same problem you did. I was looking through the charts this morning because someone upgraded one of the airlines to buy. I think it was Delta. And I'm looking at it and saying, when the airlines boomed in 13 and 14, it was because their single biggest variable cost, jet fuel, was dropping through the floor. That made sense. Now you've got airlines making new highs and jet fuel is going through the roof. So it doesn't make sense to me. And so I'd be a seller of the airlines here and a buyer of energy stocks on pullbacks.
And then the gold market has had a nice run as Bitcoin has come off here. Gold trying to get to that 1350 level. Any thoughts? Do see a little double top here at the 1345 area. Any thoughts? Nice run in gold here. About $100 move here over the last month. Thoughts on the precious metal gold?
I'd rather sell the double top than buy it here. I think if you look at the interest rate market, we banged through the 260 level on the 10-year Treasury after the auction yesterday. I think interest rates are going up. I don't think that's going to help the gold market particularly. So I would sell the double top. Some of the miners like Randgold have had bearish ratings, and Chaikin is neutral right now, but I don't see much upside in gold, especially with inflation still on the low side. Gold very often will go up when inflation starts to rise, but we're not seeing that yet. So I'd avoid gold here and take advantage of the rally.
All right, we've been on with the line with Mark Chaiken from Chaikin Analytics. Mark, before I let you go, we got a question from the chat. Where can we find a link to this webinar with Cramer?
It's not posted yet. You can go to chaikinanalytics.com in about 3 days, and the link will be up there. I am doing a webinar tonight where we're going to talk about earnings season, what's happened so far and what's going forward. Again, you can register for that at chaikinanalytics.com. The Kramer link will be up either on thestreet.com or on Chaikin Analytics within 3 days. And the webinar is midday, 11:30 on the 31st of January. It'll be recorded, so available through a link after that.
All right. Mark Chaiken, look forward to next time we talk. Have a good one.
Thank you. Great, guys.
All right, 8:30 here before Dennis gives us some imbalances. S&P's just hanging out here. Down a few ticks here at 03 and a quarter. We posted our all-time closing high at 03.75. So for sure you want to see the market get green, stay green. Keep an eye on the double top from Tuesday and Wednesday, 08.50 and 09.50. That's your bogey on the upside. We go into rally mode in the S&Ps. Dennis, let's pull up a 15-minute chart here and talk about some imbalances.
GE is small this morning, only 148,000 to sell. Yesterday we were seeing a million shares and then 2 million shares. It kept growing all day and then obviously got really whacked here. It's down slightly here in the pre-market, so the selling does continue. There is a sell imbalance of 148,000, but it's relatively small compared to what it has been over the course of the last couple of days. I know it's been really ugly time there for GE and for GE shareholders, which is me. Bank America, 113,000 to buy. BAC, Citigroup, 30,000 to buy. Morgan Stanley not posted the imbalance here yet. Sometimes they don't post them right at 8:30. It's still shown as 0, but I'm sure there's going to be probably a buy imbalance here at this time of morning as the stock is still trading up on its decent earnings report. Alibaba, 38,000 to buy. Berkshire Hathaway has been a monster mover lately. We haven't talked about Berk on the show for a while, but I tell you, Warren Buffett's stock is going parabolic here too. It was $200 back on the 8th in a week and a half here, just 1, 2, 3, 4, 5, 6, 7 trading days. It is now up at 214. So you're talking about an 8% move here for Warren Buffett. I mean, this is your thick value stock play. Crazy move again. 55,000 to buy here in Warren stock, Berkshire Hathaway this morning. These stocks are all just hot as hell.
All right, all-time high was made yesterday, right at the closing print of 214.60. Now it's your all-time closing high. Your all-time high was made in the session at 214.50. Trading up here. I mean, this stock or this I don't know, what is it? ETF, not even really ETF. It's a trust. It's just been on fire, representing, his value, his value investments. And, it just goes to show you that you could have good performance or great performance, just being in the steady stocks, and along with the capital appreciation, it's getting some nice dividends on a lot of stuff that he's owned. Bumping up against a whole number, 215. I'm not sure if there's any size at that level.
Let's go to a few ratings. There was some big ones here. Or Spencer, where'd you want to go?
We can do ratings. It's fine.
Let's go ratings because there is some big ones this morning. Give us some highlights, Spencer.
Okay, I want to start with, I guess we'll start with Walmart catching an upgrade this morning. Let me pull up where is my pro? There's my pro. Walmart catching an upgrade. It was at Goldman Sachs, right? Walmart upgraded to buy Goldman Sachs. That was a big one that I saw. Other ones that crossed my radar, Palo Alto upgraded Evercore to outperform. There was a YY downgrade upgrade, from Instinet to buy big Chinese stock, and then some downgrades. Or wasn't there? Oh, Palo Alto. That was the last one. Oh, I said Palo Alto. I said Walmart, and I said Hertz. That was it. Hertz. That was the one I couldn't find. Hertz upgraded this morning to outperform at Macquarie. So Hertz, Walmart, and Palo Alto were the three big upgrades that I saw this morning.
What about the downgrades?
Nothing huge. JUNO at Citi, was, I guess, to be expected. Comcast downgraded to neutral. Instinet, and that's really all that I saw. What jumped out to you?
First Solar down at Guggenheim, and then JUNO downgrade at Citigroup. So just looking at JUNO, hard to trade this on a downgrade because obviously it's in play. The only thing that's going to matter is what eventually is said from Celgene. I mean, if they say the talks are off, stock tanks. If they buy them, it's been speculation that Citigroup was speculating the price might be as high as $105. So I think, it's sitting here, obviously battle between the Bulls and the Bears. Citigroup, obviously, maybe, thinking that a lot of this is already priced in. I'm not 100% sure of that because the kite premium was huge. I wouldn't be surprised if the premium for this is over $80 too. So I think if a deal gets done, in my opinion, I think it's going to be over $80. I don't know if it's going to be 105, but I think it's kind of a coin flip here. I think, like normally I would say on something like this, trading up 20 points on a rumor, I would say, wow, if I'm in it, I'm probably booking it because the merger's already all priced in. I don't think so in this case, though. I think the premium could be a lot more than, where it's trading right now. But if talks break down, then the stock goes right back down to where it was. So it's kind of an 18-point up downside for probably a similar upside. I don't see $105 like Citigroup is saying. Not that I'm, follow it closely. It just seems like a ridiculous premium to pay 40 to 105 because that's where it was trading. It was for 45 to 105, but 80 or 90 doesn't seem ridiculous to me. So I think there's some upside here too if a deal does get done for JUNO.
All right, 8:35, we're going to take our second and final break of the day. And we're going to grab Anmol Singh, the founder and head trader at livetraders.com. We'll be right back. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, joined by Joel Elconin and Dennis Dick, and we're on the line with Anmol Singh. He is the founder and head trader at livetraders.com. Anmol, how's it going today?
Doing good. How about you?
Doing well. So we had your colleague, Jared Wesley, on the show a couple of days ago now. Talked mostly about, his strategies, trading the first hour of the day specifically, why he does that. Talk a little bit about your strategy, and is it similar to Jared's, or is it different in any key ways?
Sure. So, Jared and my strategy as far as day trading stocks is concerned is pretty much the same. It's based around the first 30 minutes to an hour of the market open. However, apart from the day trading style of things, I also have a style which I call the wealth producing style, which is more swing trading / core trading based on higher time frames. So I do that as well, and I do a little bit of currency trading. So that's the only difference between Jared and me. Otherwise, day trading, we're pretty much the same.
Explain that second part of the strategy to us.
Sure. The second one is mainly based on weekly and monthly charts, where you're not necessarily looking for quick moves in a few days to a few weeks, but you're basically investing, but using a technical approach. So rather than, making the decision based on the fundamentals of the company for the long-term trade, you're using technicals to take that long-term trade. So that trade might last you a few months. It might last you a year sometimes.
So, give us an example of a stock right now that you've been watching, and we can pull up the chart, and you can kind of tell us how you look at it.
Sure. So, right now I'm watching EXXI. This is an energy Gulf Coast company, and this is one that I'm already involved in at $6. And, we're looking to see if it can get back up around the $10 area. So that's one that we're looking for. This is the reason for this is stock's been oversold. It's been down from, $32 all the way to $5, and it's just starting to get a bounce. And I think this might be the bounce that gets it back around $10.
Talk a little bit about the currency trading that you do. How exactly do you approach that?
My currency trading is I don't day trade currencies. I am typically holding them for a few weeks, and that's also based on the technical style. I'm looking on, currency pairs that are breaking support, breaking resistance on a higher time frame, like a daily chart. And we're just looking to get involved once the support breaks on the short side and once a resistance break on the long side. So it's very simple strategy, because one of the things I noticed in Forex is that Forex is definitely much, much easier than stocks because the moves are much more cleaner. There's a lot of algorithms in the Forex markets because of which the technicals just somehow really work. Basic stuff like trendline bounces, those things still work in the Forex markets, not so much in the stock market. But so if you use those trendline bounces, you use classic breakout patterns, they work like a charm on the Forex markets on a higher time frame.
Going back to your equity trade, your stock trading now. So I have EXXI up. Excuse me. I have EXXI up on the screen right now. So when you're looking at charts, do you use a lot of indicators? Are you keeping it pretty simple, just support, resistance, or are there any indicators that you look at maybe to confirm an idea, or like what indicators do you use?
All right, so I'm not really using any indicators. The only thing you'll see on my chart is a moving average, which is just a 21 EMA and a 50 simple moving average. And I don't really use any indicators. I'm looking at the daily chart, the weekly chart, really trying to combine the multiple time frames to align the shorter time frame with the long-term bias. So if I think that on a weekly chart, this thing looks like it wants to go higher, I want to confirm it with the daily to make sure the timing is right on it. So as long as the time frames align with each other on the daily and the weekly, then that's kind of what I call the perfect play, and don't necessarily use any indicators in my decision making.
And then you are similar to Jared in that you're only really trading for the first. Is it the first half hour or the first hour of the day that you trade?
Well, it really depends. I think on earnings season, we can go up until like 11 a.m., 9:30 till 11 a.m. during earnings season. Like non-earning season, where it's just regular trading environment, most of the trading gets done by like 10:30. And I think that's a really powerful way to trade, because if you can really hone it down for those 30 minutes to an hour, it really makes a difference, because you don't really need to be around when you can get those results in the morning. So I'm a big proponent of trading in the morning. The volume is just, fantastic. And after 10:30, the volume doesn't exist in the market for you to get filled properly. Liquidity is an issue, and the morning liquidity is never an issue. You can get in and out as many shares you want, and it becomes an easier way to trade.
Are you trading at the close too?
Very rarely. If it's my swing trade, long-term position that's open, I might monitor it, but I'm not necessarily trading the close. Although close has some volume too, but I've just really sat down and made myself a specialist in that 30 minutes, that I know every little nuance in the 30-minute, every little glitch that can happen, liquidity issues, which routes to use to get filled in the morning. So for me, I really made my strategy specialist in the morning, that I don't really trade in the afternoons. And I did in the past, and I tracked it. What I did was I took my results, I tracked it. Hey, how did I do in the morning? How did I do in the evening? And almost always for 3 years in a row, I was making money in the morning and kind of giving it back in the afternoon. So I just stopped doing it. I just stopped trading in the afternoon.
What are there specific sectors or industries that you generally are more bullish or bearish on?
Not necessarily. I am looking at. I'm not loyal when it comes to stocks. Like for me, I'm not loyal to any sector. I'm not loyal to any particular company. For me, it's all about the chart. And a lot of times I won't even know the names of the companies I'm trading. I'll just know their ticker symbol, like EXXI. All right, now I know it's Energy Gulf Coast, but I didn't even know that. So for me, I just treat them as tickers. I trade them, I discard them, and I move on to the next one.
But heading, or at least right now, in the short term, are there specific sectors or stocks that you are bullish or bearish on, at least for right now?
Banks, financials for sure. Morgan Stanley right now today is gapping up to $55.89. And yesterday closed at about 55.30. So financials right now are looking really bullish. Like Morgan Stanley, Citigroup, all these banks look like they want to just continue to go higher, and they feel like they have probably another, I would say, 10% plus of upside left in the banks here.
And then I guess last one before we let you go, how do you explain your process when you sit down at your desk in the morning? What's sort of your process for finding the ideas that you find, or the charts that you find?
So what I do is, I'll sit down on my desk around 8:45, and for until about 9 o'clock, I'm going to be just looking at stuff that I was looking at the prior day. So what were the stocks that I was trading and looking at prior day? I'll take a look at them, see what they're up to today. Maybe they're setting up a second day runner move, or maybe they're gapping up or gapping down. So first I'll look at the prior day's list. And once I'm done filtering stocks on the prior day's list, then I head in and I look at pre-market gainers and losers. So what are the stocks that are gapping up or down more than 1% on any given day? And then based on where they're gapping at on the daily chart, I'll filter them even further. So if it's gapping above resistance, then it's bullish. If it's gapping to resistance, then that's not necessarily a gap that I would want to play. So then I filter them even further, and I try and go, when the market opens, I try and have like between 5 and 10 stocks. That's kind of the sweet spot. I don't like to look at more than 10, and anything under 5 stocks kind of feels like the opportunity might not be there. For example, today I'm only watching 6 stocks today. I'm watching Citigroup, Morgan Stanley. I'm watching Walmart. Walmart's gapping up a little bit. So, Walmart's up 2%, Citigroup is up, and Morgan Stanley's up. Those 3 are kind of my favorites for today. And IBM is also looking pretty interesting right now. IBM is moving up to $170.25 from 168. So that's another one to keep an eye on. So those are my 4 favorites for today: IBM, Morgan Stanley, Walmart, and Citigroup.
Yeah, IBM with new earnings after the close today, so something to keep an eye on for sure. Anmol Singh, thank you so much for joining us today. Have a good rest of your day, and we'll talk to you again soon.
Thanks for having me.
Someone jumping a gun maybe on IBM earnings after the close. I'm not seeing any news here. We just popped over 170. Actually got a print.
It's the big number. Yeah, that's the big number. There's size there in the book too, so we'll see. It's actually got a 32,000 share buy imbalance. So, but with some size trading over, I think it's going to take it out today. The 170 here. I don't know if it can open over there, but I think it goes over there today. Stock is just, this one's hot, and it continues to remain hot. It's going to be interesting. The earnings report, it's hot as hell going into the report. I think a lot of people are going to want to see what they say, where the revenue is coming from. Are we seeing some blockchain revenue come from them as well? So a lot of, things are going to be happening here with IBM. There's also, I know Warren Buffett, and this is one concern that I've had as an IBM shareholder, is that Warren Buffett had an interview on CNBC last week, and he hinted that he has sold his entire IBM position. I was wondering, when that actually breaks on the 13 Fs, if IBM doesn't get a little bit of a sell-off. But I think, the market hopefully has priced that in, because IBM is still continuing to go up despite that interview that Warren Buffett had. He didn't say he sold it, but he hinted around a lot. I watched the interview. It sounds like he'd sold his entire IBM at the end of the year. Took the tax loss.
Yeah, 170.34, up $1.69.
Breaking out through it. I think it looks like it's going to try to break through the 170 today.
Boy, takes a long time, and we talk about gaps, and it's kind of gapped its way back to this area, but I had a rough time back in April, on April 18th last year. You had a high of 171.69. That's a target on the upside. And also on that same day is the last time that you closed over 170.05. That was your close on April 18th. The following day, it lost $9, nearly $9 to close at 161.69. So if you've been sitting on this thing since April of last year, here we are. We're back up at this area. Big run into the report here, 155. Denny, you timed that one perfect, because
I took no heat.
Yeah, no heat, gap and go, little consolidation here. Now we'll see. Back at 170, it'd be very.
I'm going to hold it through the report. It's hard holding a stock that's up, and obviously this is up about 10% for me, or more than 10% for about 10%. 10% in a week and a half. It's hard to hold that, but I like it. I think this is your pure blockchain play. There's so many stocks that are trying to, take advantage of this. I think blockchain's the real way to play it, or IBM's the real way to play it. And that's why I've been sticking with IBM here. I'm going to stick with it. I stuck it in there for a longer term investment. I didn't stick it in there for a trade. Wish I would have stuck it in there for a trade, because I would be selling it right now, but it was a longer term investment, and I'm sticking with it. Also paying me a nice dividend while I wait, and hopefully the earnings don't do what they've done sometimes in the past when they've gapped down significantly.
All right, we've covered all of our earnings stocks for today.
Back to ratings. That's
yep.
where we were right before Animal came on. And let's go back to First Solar here. It is getting downgraded here this morning at Guggenheim. This is one that I was kicking myself because I talked about buying this a few times there because our friend Gordon Johnson was bullish the stock when he was on the show, and I usually follow Gordon. I usually make money. I did not buy it, though, and regretting it. That was when the stock was $48. It's now $70 here in the pre-market, getting a little bit of a pullback. Thoughts on... Let's just talk First Solar. Thoughts on the Guggenheim downgrade?
Well, I mean, the stock has had a very, very nice run, trading down here $1.50 at 70.50. A lot of people sitting on a lot of profits here. So even though you have a gap down, had a couple lows at 70. We'll see if it takes that out. Actually, two lows, 70.19 and 70.30. That looks poised to go. Not much to lean on in the 69 handle, folks. You get down to 68.92. That would be your 1, 2, 3, 4, 5 day low. Then another low at 68.39. So you had this big green bar 3 days ago, took it back in 2 days. Really, we are trading at yesterday's low. So if you just want to shake off this downgrade here, 70.56 was the low from yesterday. 2 day low, 70.19.
Jump over here just to a few other stocks that were on my list to talk about, and there's a lot of them, so we can really go anywhere. My list, I should show you guys my list. I don't know if you can see it, but there's about 50 stocks on it from last night. I want to talk, the whole Merck Bristol Myers thing again, because it held on to those gains. But the interesting thing for me is Merck held on to its gains in Bristol Myers because Merck has the competing drug, obviously, with Bristol Myers there. And Bristol Myers got hit on that Merck news. Bristol Myers got all those losses back. It just shows you this BTFD buying the dip mentality is still in there, even when the news is not great. What do you think of the Bristol Myers chart, BMY? Because here it is. It got hit hard on the Merck news that, this drug's, looking like it's going to eventually get approval here. And with their competing drug, it got hit $2 and came right back the next day. Again, comes right back. What are your thoughts here? It's kind of clustered.
Let's see what happens at $62. The high on the day when the news came out, 61.88, 61.86. The high the following day, 62 even. So you clear 62. You got to run up to fill the gap at 62.52. So someone's making a stand here at 62 above that nice gap fill. Your high from last Friday was 63.22, but 62, that's the number of the day here in BMY. And Merck did hold on. I was kind of surprised it did.
I'm happy. It's one of the biggest positions in my investment portfolio. I had it in there for about a decade. Wow, maybe not that long, 6-7 years. When the stock was in the 30s, I bought it. And I've sold some stock, but I'm still holding on to, I'm playing with the house's money because I've sold more than half my original position. But 62, it's held on. Not bad. I mean, it has to hold that low, the low of the day down from the gap of 61.25. As long as it's above there, then it's not in that gap area. It gets in that gap area, that's where it gets concerning.
Yeah, and boy, you did get a pop on the day, the original news day, which was Tuesday, 63.78. I think 62 is going to be your number here as well. Your close on a Tuesday, 62.07. Your close on Wednesday, 62.03. So volume really tapered off from Tuesday to Wednesday. Under 62 right now. We'll see how it happens at that double close area.
What about all these other stocks that have just been parabolic? And I just ran a scan just on FinViz for fun. It's a cheap scanner that you can just use for free on the internet, finviz.com. Give them a little promo. And I came up with, ran the scan for which stocks are making new 52-week highs. 88 of the 500 S&P stocks making new 52-week highs yesterday. And if you look at the list, I mean, it is just littered with, it is diversified list. You've got AbbVie on there. I own that one in my investment portfolio. That's one of your biotechs that has just been one of the strongest ones, despite some of the weakness that, when the biotechs were going down last month, AbbVie had none of it. And it just kept, trying to fight higher. It's broke out from $100. It looks like it's in full breakout mode here too now. Obviously, Boeing, we've talked about multiple times, that's just gone parabolic. But stocks like Best Buy, like BBY making new all-time highs. I mean, here's a stock that was in the gutter, was supposed to be Amazon, continues to just run. We were at 55 in November. Now we're 75 on BBY. It's a brick and mortar store. These stores were not supposed to, be doing as well as they are. I mean, you look at Kohl's, KSS, $40 in November. It's $65 now. I mean, these stocks have all gone parabolic too. These stocks that they were writing off in November that couldn't compete with Amazon are all back. Costco looks itching to go to me. I mean, I look at this one and look at this chart in COST. It's not a new 52-week high, but it looks like it's ready to break out too. If you can get over those couple highs, Joe, what do you think on the Costco chart, COST?
Yeah, really, really tight range yesterday. Just a little over a buck. Two highs, 92.56 and 92.84. Now we're traded down in the pre-market. Not sure if there's much volume associated with that, but someone targeting just under 93 here. So that would be a move. Also, you had a high in that area, 193 even on December 19th. So we'll keep an eye on that. The all-time high is 195.35. One stock, I can't believe we haven't discussed this yet, and this was as the market was just kind of hanging out. Apple came out with that news yesterday, and that really lit the market on fire. Coming out with some news, some hiring, some more jobs, and man, what about the guys that have downgraded Apple over the last couple of days, man? They got to be kicking themselves here. Made a new all-time high yesterday in Apple. Closed right near that high. 179.25 is your two-day high was 179.39. So double top to be concerned with here in Apple, 179.25, 179.39. Your all-time closing high was from yesterday's session at 179.10.
I'll just say 180. There's going to be size there. It's never been there before. That's going to be the next bogey. If it can take out 180, you're off to the races again. I think it takes out 180. You're going to see it at 185 in a heartbeat. So 180 is the bogey. That's the level the Bulls need to get it through if it's to continue this run higher. Just going back to the 52-week high list, though, ExxonMobil on there. Here's a stock that in November was getting written off when it was going to breach 80. It held 80, got down to 80.01, back up here at $88 here again. I mean, this list just continues. There's so many different stocks. Pfizer. Here's a stock breaking out for you. PFE, which is a stock that has just been in the gutter forever, took out some big size yesterday at 37. It kind of looks like it's itchy there too. Little triangle forming there for you, Joel. I can kind of see it. I mean, it looks like it's breaking out as well. There's so many different stocks breaking out.
Yeah, I mean, this market is on fire. Pfizer.
Here, just before you go to Pfizer, I just want to say this one. PayPal comes out 2 nights ago, and has light guidance. Stock is trading down $1.50. It couldn't even open down $1.50, and boom, it's right back to 52-week highs again. They don't even care when the guidance is light. PYPL, the guidance wasn't great from 2 days ago. Boom, right back up to the highs the next day. Forget it. You got to buy the pullback. Pull back $1, they buy it. If that was happening, in a neutral market or a bear market, the thing would be down 5-10%. It can't even go down 1%. There's just buyers underneath demand. It's just underneath demand in everything.
82.47. That was your all-time closing high from yesterday. 82.61 was the all-time high print. Only traded down 13 cents too after that big run yesterday. So we'll see. I mean, half and whole numbers, 83 here. Maybe there's a little bit of sellers there. Let's just go back and take a look at the S&P, see how we're trading this morning. A little weakness, down 2.25 at 28.0150. Just ripped through the 2,700 handle. Keeping an eye on the pre-market low here. Pre-market low is 99.75. Have a little support at 97.25, but that 90 handle, I mean, when we're above 2,800, man, we've fallen in the 90 handle. We've had some quick declines. Dennis, any final thoughts here on our first day here, full video?
just keep in mind TLT getting murdered here this morning. TLT is down $1.07, and when you see the TLT down that much, I automatically think the banks are going to be hot. So not only Morgan Stanley going to drive the banks here today, the TLT being down is going to drive them as well. Bank of America, they're not up that much yet, which is surprising. So there might be a trade opportunity here where maybe you can pick up some of these banks on the cheap. I mean, the S&Ps are down, so that weighs on the market a little bit. But Bank of America only up 13 cents. TLT is down $1. Morgan Stanley has pretty good earnings this trade up. I mean, if Morgan Stanley rolls over, that's the wild card. Then it could drag down Goldman with it. It could drag down some of the financials. But, other things being equal, if the TLT is down $1, you got to think there's going to be some strength in the banks. So I'm a buyer of the banks on any pullback.
Bank of America made a high yesterday at 31.29, and that was after trading all the way down to 30.34. Closing right there, 31.18. You got a double close, 31.18, 31.24, and that actually represents the high of the move, 31.79. Now that was your high on Tuesday, so goes into rally mode. We'll see, but needs to hold that double close area right at 31.20. All right, Spencer, you want to finish up today's show and preview what's on the docket for Friday?
I can do that. On the docket for tomorrow's show, last show of the week, we're going to be joined by Paul Uke from LifeSci Index Partners. He is maybe our best biotech, one of our best biotech guests we have on the show. So Paul Uke will join the show tomorrow at 8:35. But if you want to catch any part of today's show, any older shows, you can catch the podcast. No video on those on iTunes, SoundCloud, and Stitcher, or just rewatch the show. YouTube.com/BenzingaTV is where you can do all that good stuff. Thanks to our guests today from Mark and Anmol for joining us. Thanks to those of you who joined us in our chats, premarket.benzinga.com and on YouTube as well. Have a good rest of your day, everyone. Good luck out there. And we'll see you guys on Friday for the final show of the week.